Good day. This is the Eye of the Storm podcast, the big picture technical update for the S&P 500 and the NASDAQ 100 and the futures markets for Tuesday, July the 4th, 2023. Again, happy 4th of July. Hope everybody is enjoying an extended long weekend. Those of you that may have traded yesterday, it was a shortened session and giving us a 4-day weekend to celebrate summer. So hopefully you're all catching that and having a good time. I'm going to begin on updating the futures markets, not necessarily the cash. So I'm now going to be doing the futures markets, but I'm doing a big picture technical update on both for the S&P 500 and the NASDAQ 100. Beginning here with the S&P 500, the ES. Again, I'm just going on my daily chart because to back it all the way up, I'm just going to be repeating things that already should be known. Really focused on all of the action that's taking place from the October 2022 lows right here. And that is the completion point for primary wave A. Again, the January 2022 highs, all-time highs, marks a completion point of a supercycle, wave 3. So counting down from that, it was a primary wave 5, intermediate wave 5, all the way down, a cycle wave 5, primary wave 5, intermediate wave 5 to complete that supercycle wave 3. So from that point, we began a supercycle wave 4 correction, which in and of itself is going to take many years to complete. So we're in those beginning stages. As we work our way down, we are within the initial cycle degree A wave decline. Now, what's inside of that cycle degree A wave decline are 3 waves of primary degree, of which we completed primary wave A out of the ABC in October of 2022. So from that level, that low, we have been in the process of tracking and tracing out a primary degree B wave countertrend rally. What's inside of that B wave countertrend rally are 3 waves of intermediate degree, which will be labeled A, B, C. Here's intermediate wave A, here's intermediate wave B. We are in the intermediate C wave heading up. It's a counter trend rally. It's heading up. What's going to be inside of that intermediate C wave rally? It's going to be 5 waves of minor degree, of which we have minor 1, 2, 3, and 4. We're in the minor 5th wave. Inside this intermediate C wave, inside this primary B wave. So we are quickly reaching the conclusion of this counter-trend rally, which began in October of 2022. So it's really been in force for about 9 months. We're now into July, so we're heading into the 10th month that this has been working itself out. And I feel like we've really tracked it. It's had its bumps, it's had its grinds. It even threw a little extra in to say we're in a new bull market, and that came in May. Why? Well, all of this sudden rush to jump into what has become a new sector, even though it's been in existence for a while, and that's artificial intelligence, the AI sector. And that came about because we had stellar earnings from NVIDIA, and how the CEO of NVIDIA really began to say that their intent is, or they expect, or expectations are, they will continue to be the super chip maker for all of the artificial intelligence as their new chip gains in popularity and availability. And then came a little bit of additional news saying that, well, they might have trouble getting that sold into China. So, there's been its bumps and grinds and ups and downs, but nonetheless, the market has responded by moving full force into anything that is contributing to or building on artificial intelligence being the future. So with that all in mind, It fits to a T to the characteristics and the personalities of what we're actually tracking. First of all, a larger counter trend rally, a B wave, primary degree, that's a pretty large degree, and then all of its breakdown. We see within it that the powerhouse that a C wave normally would carry, well, that's what we're seeing now. And then breaking that down even further, what we're seeing within the third wave, all of this fits to pretty much to fit the picture of what we're doing. Now, B waves in and of themselves have been called sucker plays, deceiving, deceptive, containing many points where the reversal in people's minds is what actually ends up showing up, such as we're in a new bull market, which was announced, I believe, late April, early May. We're in a new bull market. Why? Well, because one index, and I believe it was the S&P, maybe it was the NASDAQ, had increased over 20%, had a 20% rise from the October low, which they were declaring as the low of the bear market. So they had to declare a new bull market. Now, whether that is realistic or not makes no sense or makes no difference, because what we're seeing is exactly the play out. Okay, we're off to the races. Everybody's jumping back in. And it came via moving into anything AI. So we saw strong increases in advanced micro devices, in Microsoft, in Meta, in Amazon, in Apple, in anything that could touch artificial intelligence. Now, bringing this all up to date, here we sit within the minor fifth wave to complete the intermediate C wave, which will complete the primary B wave. Now, coming down, what we're looking at is within this minor fifth wave, what do we have? We have 5 waves of minute degree, of which we've done 1, 2, 3. I don't think 4 is over yet. I'm down to my hourly chart. So this also is going to serve as kind of the update that you look for what we could maybe see for tomorrow. So we're still within, I believe, the 4th wave, and we probably need a little bit more downside. And maybe that's how we start Wednesday, July the 5th. We'll see a little bit more downside. I believe that it continues to hold above the hourly 50, which is at 44.78. I think we might need to dip below 44.79. Well, 44.78 does the trick. Maybe we get a little bit below before we then start to head up in that final minute fifth to complete the minor fifth to complete, et cetera, et cetera. So we are close, in my estimation, to completing. Now, that does not mean that we get an immediate reversal, because I can't tell you right now where the end of 4 is, so I can even do some basic fibs out of my very near-term chart, which is the hourly chart. I don't have those numbers yet. We can start building where we believe this all will complete. And I'm going to go back out to my daily chart. First thing that I want to add, let's take a look at to where the C wave now, right? We're looking at the intermediate C wave. We're going to derive that from, we go from that low, and I need to change this over and go to there, to the A, down to the bottom of B. And now we have that. Let me clean that up very quickly, so we don't need any of these. The only ones that matter is that, which is already hit. There's that, there's that. And we're going to leave that one, and we're going to take that off and turn this into 2.618. Move this over to here and say, okay. So now what we have is our, for intermediate wave C, 618, that makes no difference. It's already been taken out a long time ago. What would come up next would be equality, where wave C would be equal to wave A, and that comes in at 45.65. So we still got about 75 points up there. 45.56, excuse me. So, and we're at 90, so it's about 60 points that we still have to rise. Now, what's above that? 1.618. And that's where we start to drop into on a larger scale, where this entire primary B wave turns into an irregular B wave and produces new all-time highs. That just merely or because of the fib level remains in a technical picture. What's the probabilities? Too early to say. We haven't even gotten to the minimum or the most common. And we can measure out in here, and we'll start to see where this all kind of caps out before getting there. So on a larger time frame, we include it because it sits there and it's a fib level for an extended move. We just can't see if that move is actually going to come to fruition, but the potential is there, and that's labeled 1.618. Okay, so most common, equality. Second up would be this, which is already out of the picture. Third up would be this. So we need to get past that, and depending on how hard it would blast through it, and what would the catalyst be, then we add that to our analysis. Now, what can we come up with next? Well, I can now we have minor wave 5. Minor wave 5 has a relationship with, or fifth waves have a relationship with the first wave. In this case, it's minor wave 1 as it relates to minor wave 4. So first we're going to use the same, we're going to use extensions, and we're going to go up to here, and we're going to bring it up to there. So what we have here, I want to make sure, I'm going to go down to my hourly chart. And yep, it did. So 43.68 is that low. Now, let me clean this up as well so that we can just get rid of the excess that we don't need. And we look at the numbers that we do need that makes sense to the move. So the Fibonacci relationships are as follows, is that wave 5 would be equal to wave 1. That's most common. Second up would be that wave 5 equals 0.618 of wave 1. And the third would be that wave 5 equals 1.618 times the length of wave 1. So now let's look to see where those come in. The first one that we have is that the equality is up a little bit higher, where minor wave 5 would be equal to minor wave 1 at 46.03. Not that far away should the intermediate degree C wave, which would reach 100%, but 46.03, 45.56, it's not that great of an addition. So again, the zone now has expanded. And we have that right there. Now, what we also have is that we have the minor fifth wave equaling 1.618, excuse me, 0.618 of minor wave 1 at 45.13. Now that remains a possibility. It fits the bill because it, number one, puts in a new high above 44.94, which we've already done, but that just finished the third wave. So we'd be looking for this fifth wave, number one, to break that level and that level again. And we're not far off from it. We've been hovering around 44.90. So 45.13 may seem a little bit low. That moves us up to equality pretty quickly. And what I think could come out next week, maybe we'll see an extended rally and Apple will see an extended rally, and some of the stocks that are going to coming out of Friday's expiration fairly strong, Apple being one of them. So we've got a couple of things that could feed into this. We don't have any major things next week in terms of, let me just take a quick peek in terms of data that's going to be coming out next week. We have factories orders. We have the minutes of the Fed June meeting. Those are both tomorrow. We have a Fed president, New York Fed President Williams will be speaking tomorrow. Thursday, we have ADP employment, initial jobless claims, U.S. trade deficit, and an S&P flash U.S. services PMI, and ISM services all come out on Thursday. On Friday, we have the numbers for June in terms of the non-farm payrolls and U.S. unemployment rate. So those are on Friday. So we have some numbers that could really shift the narrative a little bit for the next 3 days and possibly propel us at least up to finish up this wave. Initially, again, once I can get wave 4, and for all I know, wave 4 could be done. It could be done there. Small could be done at 78, which we reached 79.50, which we reached last. Well, actually, yesterday, on Monday, we reached that low. And that may have done it. And if I get it there, then I have the ability to run, again, a fifth wave analysis between a minute fifth and the minute wave 1. But I don't have definition yet as to whether that's complete. But what I'm going to do, I will put in, let me open this up a little bit more so I can get a hold of these levels easier. I'm going to put it on from there into there and then over to there. Good. Okay. So, and let me clean this one up again so that we're just putting in the levels that we need that coincide with what we're looking for. Oop, that one stays, this one goes, and that one goes, and this one gets changed to 2.618. We always let the extremes come through if they need to. Okay, so now what we've done, I have added for if indeed yesterday's lows at 44.7950 completed this small fourth wave, then we have the same numbers. Equality for a minute fifth wave based on the current level, right? So minute wave 5 would be equal to minute wave 1 at 45.41. Now, what have we just done? We've just kind of really are building up a nice cluster here. Second up would be that minute wave 5 would be equal to 0.618 of minute wave 1 at 45.17, which again, now we've got another 618 cluster, 45.13, 45.17, 18. So we're getting clusters all the way up. Finally, we have where minute wave 5 would be 1.618 times the length of minute wave 1 at 45.79. Well, the cluster now has grown. 45, 13, 17, 41, 56, 79, 46.03. And there are our fib levels to coincide. This, on the minor degree, would be more realistic that it could extend up and get there. That just carries these other stopping points higher with it as it exceeds. But it's not that one overtakes the other. It just provides additional levels. If the minute fifth wave were to extend strong enough, it could get us up to this level. Or if it only extends 1.618, it's going to agree with these other two levels. It just exceeded them. Didn't quite get to that one, exceeded this one. But they're all in relationship with one another in terms of completing this larger move. If we take a look at our moving averages, we can start on the daily. We're going to remain pretty much in alignment here. And you can see, let me just open this up so we can get a picture. Look at the 200s, both angling up. The 50 rising steady, the 20 rising. The 8s, I've got the SMA and the EMA are both heading higher. The 4 leading the pack. Tightening up a little bit because we've just been basically very slow and low volume yesterday and today. So again, nothing new. We're still looking for additional upside, but I do believe we're reaching a conclusion. I cannot tell you exactly where that's going to happen, but we're now building some points. Over in the NASDAQ, we got the basic same thing. We had the narrative, we had the stories, we had everything. But the NASDAQ has had a stronger benefit from the rise in building portfolios surrounding artificial intelligence. And Apple's climb has absolutely put a lot of the upside pressure here on the NASDAQ. Now, in the NASDAQ, I still have quite a bit of a lot of these levels are still in place. So I basically, if I put this one, that one's going to be all the way out here on the outside, right? So what we have going on, in fact, I can take this out. That one no longer is in play because the next stop, that would be on a primary degree level where where primary B could come in. And what I do to get that is I put the retracements for all of primary A. So it's already exceeded the 0.705. So next up would be the all-time high at 16,767.50. That is where primary wave B would be equal to primary wave. Beyond that, we have then, of course, we had what I'll put it, I will put it back on, because what's included there are the extensions that fit for the irregular, and that would be up here. 0.382, 1.236 is in there, and you can see it now captures the intermediate C wave, would be at 2.618 times intermediate wave A. That's at 18,000 plus. The minor fifth wave would be 2.618 times the length of minor wave A, again, up here at this level at 18,200. So should we get this burst out of all of this, and we start getting beyond the all-time high as it stands right now at 16,767.50, well, that's your first level. And we have a trifecta of resistance there. Trifecta of fib resistance. Doesn't necessarily have to equal 1.382. That would be the next level, but I got nothing to agree with it. So if the potential and the probability of an irregular B wave, primary B wave, then these fibs all line up right here, just above 18,000. So if it's going to do it, it's going to do it in grand style. I cannot tell you that that's going to happen. I don't think anybody can. If they do, oh, guaranteed, because, well, we're in a bull market. No. That's come up with a better reason. Now, could it be that Apple just keeps on going and its next level is 200 and then they're just going to keep pumping money? Yeah, they could. They could. But I think we got a lot of other stuff coming in between. So I'm going to stick with my lower levels for right now. And so what we've got going on is that we have the intermediate C wave, 1.618. Intermediate wave C would be 1.618 times the length of intermediate wave A, and that comes in at 15,795. Remember, we're at 15,344. So we got 400 points plus, 450 points before we're at that 1.618 level for the intermediate C wave, right? So again, just breaking it down, which I did for the S&P, but within primary B, we have an intermediate degree ABC. We're inside that intermediate C wave. What's that? 5 waves of minor degree. 1, 2, 3, 4. We're inside that minor fifth wave. So here's our relationships. And I need to kind of break this down and take off some of this external stuff. Let me go down one more. I should have done this prior, but I forgot that I hadn't. I did it on the S&P, just so that when we're out there, that the charts are going to be a little bit more readable without all this labeling in the way. And I'm just taking it off because we're pretty satisfied that that's the end of minor wave 4. And now we're in the minor 5th wave again. 1, 2. I don't think we're done with even 3 yet. We may be. We may have finished 3, and that would be here at 15,394. And then we still need a little bit of a 4th wave. In fact, I will put that up there. Let's see what this one, 92, and this one is 90. So I'm going to put it here at the 92 level. And a drawing. Sorry, I should have had this ready. I apologize. But I have been enjoying the last couple of days taking it free from the markets. One, so I can come in with a clean, clear head to take a look and make these updates. So there's the 3rd. And we do have an ABC down. The 4 could be here, could be, in which case this is just the slowness, and we will pick up that rally again when Globex reopens this afternoon, more than likely once the European markets open, and then again at the start of our session tomorrow. So again, if I'm looking at this, we had yep, where wave 3 would be equal to wave 1, and that was right here. Could be, it could be, it could be. Puts a lot of pressure on wave 5, though. So that's why I was going to allow for a little bit higher here. And then we're looking, maybe it can get back up towards this 154 level. So that's why I didn't put that in there. But I'm going to put it for now. Let's see how this all pans out. Right? Wave 3 would not be the shortest wave. Wave 5 can still come in. And since it equals wave 1, we're at a stretch. We'll have to wait and see how this all plays out. But if this indeed, then we're looking for the completion points to start coming in. And what I'd be doing is I would be taking this off, right? And I'm going to I'm going to add one more level and take that off and go over to my extensions. And we're going to be looking at in minute wave 1. Come on, puppy. There you go. Right there. Okay. So now, and let me clean that up. I know, but if I set these different, then I'm going to be adding them all the way up. And that'll make us crazy. 1618. Change this to 2.618. Thank you for bearing with me. And doing that and saying add. Okay. So what are we looking at here? Again, let me just flip to my 4-hour chart. Here we have the C wave. We have 1, 2, 3, and 4. We're inside this 5th wave. We have 1, 2, possibly 3 being done. I'm going to give the benefit of the doubt. We got a little bit of extra pop. Then we put in a 4, and then we put in a 5. That may not fit, which is what's happening within the markets. So we're going to leave it as is. And that would be, that would be labeled wave 4. Sorry about that. That would be, it's going to start right up again. Sorry. That would be labeled wave 4, and then we're into wave 5. So we should get, again, 1, 2, and this is a little bit of wave 2, and then we get a nice little climb up out of here. Now, what are we looking at? Let's start to build our numbers. So again, moving up, we have the outside, which again is the we go up one more so we can just be very clear on this. Here, this is for the larger primary B wave, right? So we've already surpassed that. We know the all-time high is right there. And then we have that irregular, which kind of starts to stack up on the 2.618s for the intermediate C wave and the minor wave 5. Stack up right in here. And that's the minors. On the minutes, we don't. Actually, it might. Let me just do something here. I got to get this open enough so I can bring it down and see what's inside of it. We have 618. Oh, we do. We have it all. 2.618. Yep. So we have all of our 618s stacking up right in here. So if we go to regular, that's a very strong cluster, folks. Very, very strong cluster. If this NASDAQ decides to go what we might term a little nuclear here in its final phase as a true blow-off stage and goes to an irregular move, we have a strong cluster right there, just above 18,000. Now that's going to be quite the move, quite the move. Let me just open this back up and take a look at what we got going on. Bring it back down to my hourly chart. Okay, so now minor 5.618 of minor 1, 15,642. We have minute wave 5 being 100% of minute wave 1, 15,674. Those are very, very strong. Then we have 1.618 for the intermediate wave C at 15,795. So throw over to throw over changes the fib a little bit, but not any greater. So I think our zone, first being equality, which takes us through here, gets us past that. I include it because that is the first is equality. The second most common is where wave 5 would be 0.618 of wave 1. That's at 15,533. It certainly breaks that high. So yet the NASDAQ has yet to break its minor wave 3 high, which is at 15,475. So this initial, if we get 5 waves and that's all you get, if this is 4 and this is all 5 can do, it starts to match up and go like, that could be it. That could be it. You put a 5, a C, and a 3, not a 3, a minute wave 5, a minor wave 5, an intermediate wave C, and a primary wave B. And it could all go right there. It could. We're looking for these levels, and you're going to see where we seriously can start to line up, and we're very much ahead. But we've got a lot of movement, a lot of points in between, right? We have the ability where minor wave 5 would be 100% at 16,129, 2.618, a minute 5, 16,264. I'm telling you, if it starts plowing up through these levels, this could be a strong zone. This would be a very strong zone. Here we have the first of it, and then it extends right up into here and includes these 2 levels. So that zone, yes, it can start there, but I think if this gets through this first 618, it should go to the 100. And so from 15,674 up to 15,900 is going to be strong resistance to complete this whole picture. Now, we're going to take this day by day. I'm not calling any top. The market is not giving any signal yet. That's it. That's it. Flashing yellow, flashing yellow. We're not getting any of that. And we still have narratives going on out there. But beginning with seeing that we may have gotten through a lot of that narrative about interest rates. And if we're expecting 2 more hikes, the equity markets are going to have a really tough time pushing the narrative like new bull market. We got to go, we got to go, we got to go. AI or not. Now we saw a major end of quarter expiration and a seriously strong push in Apple. Adding that. Now we might get follow through on that, pushing us up to our limits here. And then we get our turn. We'll see, but it's out there and we're going to track it all the way up. So I'm not calling any top. I'm looking for areas of resistance that may complete this move. Call it what you may. Now, the other thing that I do want to include today, and this goes for both markets, but trading in the equity markets. These are just numbers. They're technical numbers. They are figured based on a Fibonacci level. a Fibonacci relationship between numbers. So this is technical. And the fundamental either catches up and goes with or takes precedence. Now, how do I personally trade that? I'm not necessarily looking for a top. I'm not necessarily looking where to go long or short. And if you really want to play with what these larger trading firms are doing, they're coming in every day and they're just playing the numbers. So it becomes a numbers game. Where gamma's going, where this is going, where this position goes, what gets flat, moving this to that. And so it all gets played out according to the numbers. So I'm not trading bullish or bearish. This is a major thing that I want to try to get across for people. If you're going to trade bullish or bearish, you're going to get caught one way or the other. And so because you're buying or you're selling and you're holding onto the position. When you're trading according to the numbers and putting your position together and just moving freely in and out of the market, you're just making money. That's the goal. The goal is to make money, not to have a position that's going to come into fruition, because the whole narrative in terms of how we trade is shifted. Yep, we had the macro traders come in, they did their thing in AI, and they have a job to do, either by adding or subtracting from their current positions, long or short. That's going to protect their portfolios that they're responsible for their clients. That's their job. But now, if your job is to mimic them, then you should be giving your money to an asset manager that'll do it for you. If your goal is to make money every day and build your portfolio and build your trading that wise, then you have to turn, then you really must become a technical trader, and you don't take a bias. Like, I'm not buying or selling and holding. If you're buying or selling when you're going to hold as a swing trader, different story, but you're still playing according to the numbers. You're not taking a bullish or bearish posture. You're playing according to the numbers. It's reached this level, I'm going to put on a sell because I expect it to drop back down to this level. That's technical, not fundamental, nor are you declaring a bullish or a bearish posture. So what I'm trying to explain is just a different approach to trading. And it allows you to buy and to sell at all these different levels without having to say you're bullish or bearish. Now, people take these postures, and I respect that. But it doesn't suggest for 1 minute that I'm bullish or bearish on the market. I'm playing according to the numbers. If my numbers are showing me upside, I will be a buyer tomorrow. Because if my goal is to make money, then that's the direction I'm going to play if that's where the market is heading. And if its technical numbers match my technical numbers, so be it. That's where I really kind of want to end this. I want to start a conversation that we have to meet our own goals and how we want to trade. And when I say I'm not approaching the market with a bullish or a bearish narrative or posture, this is what I mean. I'm playing the market according to price action. And I may be buying it several times. I may be selling it several times tomorrow. Hopefully both, and both become profitable. But I'm not going to say I'm bullish today or I'm bearish today. I am just trading the numbers. And it leaves you open to making quick decisions and the ability to move in and out of the market with ease. Okay, I am going to finish this particular technical update right there, but I wanted to make sure to include that one little conversation right at the end. Thank you for listening for today. The next Elliott Wave update will be tomorrow, July the 5th. Have a great balance of the day.